Welcome back to another episode of the Boro4Boro podcast, where we take a bite out of the Big Apple real estate scene. It's 2026, and we're back with an exciting new season and an even more exciting new guest. But as always, I'm Matthew Winter.
Tracy Byers.
Isaiah Ajala.
And we have the pleasure of being joined here today by real estate entrepreneur Jude Bernard. Thanks for having us.
Thank you for having me. Thank you so much.
Thank you. It's a pleasure. It's a pleasure. And so, Jude, for those at home, real estate entrepreneur can mean anything, but in your own words, what does that actually mean?
Well, real estate entrepreneur, that means I use real estate to get a dollar. All right, so I'm trying to get it any way possible. I'm a real estate broker. I'm a general contractor. I'm a landlord. I'm a consultant. I have commercial property, residential property. I do short-term rental. I have event space. I probably do other things that I probably can't remember at the moment. But if it involves real estate, I'm doing it. So if it involves real estate and it's profitable and legal, I'm doing it.
100%, 100%. And when you were younger, Jude Bernard, was real estate always the thing that you knew you were going to get into, or did it kind of evolve into this?
No, it kind of morphed into it. You know, like I was hell bent on being an entrepreneur. I think my first venture that I was trying to get into is I wanted to open a rim shop, right? So I remember wanting to open a rim shop. And I also remember wanting to open a bar. You know, Those are the two things I really wanted to get into. And even, it was even like I had my primary residence and I had taken a HELOC out and I was, looking, I was meeting with brokers, looking at spaces to open up a bar. And the same agent that was showing me the bar one day, he calls me up. He said, "Hey, I have an opportunity for you. It is a brownstone in Clinton Hills. You could get into it for it was going for a little bit under $400 at the time, and I could have gotten into it for under $50,000.
Wow. What year was this?
This was 2003.
Wow.
So this was the very first time I bought property in Brooklyn. Prior to that, I was only buying properties in Queens.
That's dope.
Yeah,
that's dope.
Shout out to Alan DeSilvia from Corcoran who put me on.
Yeah,
he still takes credit for that.
He gave you your Brooklyn start.
He gave me my Brooklyn start.
That's amazing.
Dope. So obviously you're a real estate investor. What neighborhoods do you primarily focus on? Is it only Brooklyn or are you in Queens? I know you mentioned that you bought your first property in Queens. Do you still own that? Do you still invest in Queens? And what type of investing? Is it fix and flips or just buy and holds?
I do pretty much everything in regards to real estate, but in the areas that I concentrate on right now, I focus mostly in Brooklyn and in Harlem. In regards to Brooklyn, I go for Brownstone, Brooklyn, that is on the north side of Atlantic.
Okay.
North side or west side? Whatever.
North side. I'll say north side.
Yeah. So basically, I rock out in Bed-Stuy, Clinton Hill, and Fort Greene. Those are the three neighborhoods that I rock in Brooklyn. Yeah. In Harlem, there is a little pocket around between 137th and 148th. Is a 10-block radius that I rock with over there. Everything around the 145th, 137th Street train station. So those are my pockets. I always try to stay in a pocket where I have economies of scale. You know, I have the same handyman, the same plumber, this, that, the other,
Makes
right
sense.
there, so that I'm able to control, and it saves me in the long run.
Yeah, I saw on the Instagram that you acquired a property on 137th Street, which was boarded up for a few years. So can you tell us a little bit about how you acquired it?
Well, you saw it on Instagram, but it actually came from Instagram. Somebody hit me on the DM about that property and told me that this particular property was going to be auctioned. So I actually put a pool of people together and used that money to acquire, and then refinance, paid everybody back. But the beauty behind that property was that it was a Class B property, right? So this was around the time that Airbnb was getting shut down in New York City,
right.
And when I read the law, I read it, and it stated that only Class B properties were going to be allowed to do short-term rentals in New York City. So, with that being said, I acquired that property fixed it up, and even though it was very expensive, about a year later they completely banned Airbnb to the average person.
Right.
But that particular building, since it was all Class Bs, I was able to use that as a. I have 6 short-term rentals in there, and last year I made 1.1 million. I grossed 1.1 million on that building alone.
Wow.
Just through short-term rentals.
Just through short-term rentals.
That's amazing.
So basically, New York City pretty much came in and wiped out all my competition.
They've done you a solid.
Right.
Yeah.
Right.
Yeah.
So
But that's a great story because not only are you talking about the fact that, like Tracy said, this is over years. People who are savvy about real estate investment, you're not going to be looking for it to be this quick flip. And I think a lot of the folks that are listening at home who are interested in getting into real estate or maybe even starting to dip their toes, investment in real estate is something that people think you can make a lot of money. But based off even that one story that you're saying, you got to be able to stick it out for years. Is that something that's common, or is
very, very common? It takes me years to make money on a property. You know, like it takes years between. Everybody's pretty much like the average person is like looking at it at cash flow, right? They're looking at, okay, I put $100,000 into this, and I'm gonna collect $2,000 a month rent, and I have a $1,500 mortgage, and that means that I'm gonna be making $500, right? So that's no disrespect, but you know that's kind of like real estate for dummies, right?
Yeah.
But like there's so much more to it, right? You have to look at your appreciation. First of all, how much equity are you walking into, like right off the bat? Then you got to look at how much forced equity that you're putting into it with whatever repairs that you're making.
Yeah.
Right. Then you have to look at the debt reduction that's happening every month. Right. Every month you're paying the mortgage, maybe $100, maybe $1,000 is your principal reduction. Right. Then you have to look at the tax benefits, the depreciation, right? And if you really want to get freaky with it, you want to do a seg study, you know what I'm saying?
Yeah.
And get all kinds of tax incentives that way.
and just for those at home who don't know, what is a seg study?
It's basically a way to force depreciation on a specific property. Instead of it being at 27 and a half years, you can force it. You could take all your depreciation in one shot, right?
Oh, wow.
So like this year.
Yeah.
This year was a good year for me with crypto. Well, last year was a good year for me with crypto. So I literally made a huge windfall in the crypto market, right?
Right.
And I would have been taxed heavily, but I was able to do a seg study, and that
Help you offset.
it's gonna help me offset some of those taxes.
Yeah.
So like at the end of the day, we want to make sure that we are playing chess and not checkers in real estate.
Right. So I want to take you back, right? You said the property in Harlem, you put a group together, right? Obviously, we're in New York, right?
Yeah.
House prices are always going up. And I'm always finding individuals that would love to jump on a property ladder, but can't. My advice to them is, do group economics. Like, join with your sister, join with your brother, get some friends together and buy a property. The group that you put together, was it family, was it friends? And how did you come about?
Well,
how did you come about forming the group?
The group that I put together was basically people that I knew, that were interested in real estate but didn't have the time or the experience to do anything on their own,
right.
or whether and who had the disposable income that was, wasting opportunities. Wasting resources by just leaving money sitting in the bank collecting 2%.
Right.
So I reached out to that specific group. Now you have to be very careful. Like you just can't put a mass mailer out there because there's SEC regulations and things of that nature that you have to be. There's proper ways to market and solicit to people you don't know, which is why I never solicit to people I don't know. So that's something that people need to individually research.
Yeah.
Like don't go on Facebook trying to
See that on Instagram a lot.
Exactly.
Yeah. There's people that are the bad actors out there doing that, and then they're getting caught up.
Yeah, getting caught up. if you know better, do better.
Right. So you're saying for large properties, don't solicit, but if it's like a 1 or 2 family, would you suggest
No,
it?
it has nothing to do with the properties. It basically has to do with making sure that you are following the regulations set forth by the SEC. So if you would like to do, if you would like to do something big and reach out, there are companies. Shout out to Planet Wealth that does that. That you could go through a Reg CF or you could do some sort of the word escapes me right now. Syndication. You could do some sort of syndication where you put a huge group together and get a syndication attorney and put the paperwork in legally.
Yeah.
That's one way of doing it. But if you know what I'm saying, if the 3 of you guys want to go from the podcast crew to the real estate crew and put your funds together, it's all good.
Right.
You know, so long as everybody's on board and everybody knows what they're doing and you're not soliciting strangers and promising them the world.
Right. You and something you mentioned that I want to go back to. You said if you know better, do better. Obviously, you've been doing this a long time, so your knowledge and what you've learned over the years has helped you to be able to know the right ways to do things and what to avoid. But along the way, how are you actually educating yourself? Was it a lot of on-the-job training where you were making mistakes and having to figure it out?
Yeah, like at the end of the day, like nobody's a saint, right? Everybody's gonna try to push the limit.
Right.
Everybody's gonna try to get that job done without pulling a permit. Everybody's gonna try to get that mortgage and tell them whatever they want to hear so you get the best rates. Now, is that the right thing to do? No. Is that something that I'm promoting? No. Is that something that I'm doing in the future? No. Is that something that I did in the past? I don't know. You know what I'm saying? We won't be incriminating ourselves here.
100%.
But what I do say, if you know better, do better, because at the end of the day, the system is built to catch bad actors, right? I had a friend of mine who was a Baltimore police captain, and he told me that he ran into some of the people that he was investigating one night at dinner, right? Yeah. And they made a joke. He says, "Hey, you didn't catch me today." He's like, "Yeah, I just got to catch you once, though."
Right.
You know what I'm saying?
Right. Yeah.
Right.
So.
Right.
So that's the same thing with the municipalities, DP, DOB, all these agencies are in New York City.
Yeah.
Their goal is to catch you and find you and stuff like that.
Right.
And eventually, you keep doing wrong, they will catch you and find you, and the penalties most likely will be
substantial.
Probably. Now, again, I'll keep it real with you. If I am paying, again, this is math. This is keeping it real.
Yeah.
If I am paying $12,000 a month, in interest on a property that I got, and it will take 60 to 90 days to pull for the permit to come up. And the cost of working without a permit is $5,000. That's where you kind of got to do the math and do the risk versus reward and really put the pen to the paper. And, it's just like I have a fire hydrant in front of my house. Yeah. Right? I have a fire hydrant in front of my house. How many times can I park in front of my house before I get a ticket? Right. You know what I'm saying?
Risk reward.
Right. Like if I could park it there, 20, 30, 40 times before I get my first ticket, it was worth it.
Worth it, right.
As
opposed to going to a garage.
Exactly.
Right. So now I want to take you back, right? You said you have a selected neighborhood in Harlem, or 10-block radius in Harlem, and in Brooklyn. You said Clinton Hill, Bed-Stuy. One, why those neighborhoods? And then also, house prices are going up, especially in those brownstone neighborhoods. House prices are going up. So how do you, what is your buying strategy? How do you find these deals? Because house prices are going up. I mean, we just sold a brownstone in Bed-Stuy that needed a full gut renovation for 1.4. 5 years ago, even you wouldn't have been even thinking of buying a house that needed a full gut for 1.4 because it just wouldn't make no sense on the flip side. So how do you navigate these markets? Because they're not the Bronx or things of that nature.
I wait for my pitch.
Yeah.
At the end of the day, anybody who who has a high batting average,
Yeah.
they don't just go around swinging at everything. You wait for your things that fall into your specific buy box. There's always an opportunity, you know. And what I do is I'm constantly creating relationships, and I'm constantly adding value. So when an opportunity comes up, my name is mentioned in the room as somebody who could get the deal done quickly and quietly. There's a property that I just acquired in Harlem. They bought it for $4.7 million, and they were going to put a methadone clinic in there.
Yeah.
And the neighborhood shut it down. You know, the community just wasn't having it. They were out there, you know, with picket signs, and just so now it's frantic, right? So now the nonprofit that was going to put this methadone clinic has to get this off their books. All right, it has to get this off their books. The agent that was representing them, I had already done some deals with them, and they know that I could close. So they were trying to get rid of this property. I ended up buying this property for $2.5 million.
Yeah.
So I basically walked into this thing with at least $2 million in equity.
Wow.
Yeah.
Right. So how did that happen?
Relationship.
It happened through my relationship. It happened from me doing what I continuously doing what I say I'm going to do when I say I'm going to do it.
Right.
So it's like, yeah, you guys could dick around and try to sell this thing. But you're going to continuously get bad press. You're going to continuously lose money on this.
Right.
Or you could go with somebody that you know. Well, you never know, but that the agent is vouching and could say, well, he's closed on X, Y, and Z, and he was a stand-up guy on all three of them.
Right.
So that's how I get my deals.
So what are some of, like, let's say the red flags that you find in deals where it starts off good, but then it's like, oh, you see something that's a little off? What are some things to look for like that?
So the thing that you always got to look for is bad people. You know what I'm saying? Like, shady people make shady deals, right? People who are lying, people who are inconsistent, like the emails. The emails are inconsistent, which lets you know that they're shopping other things, you know, or like the story of the property does not match what you're physically looking at.
When you say the story of the property doesn't match, explain that.
Okay.
Like building class or what they have listed, or
I have a property that it was a 5-story property.
Right.
And I don't know if this was ignorance or they was just trying to misrepresent, but there was a stain on the floor on the second floor, right? And when I asked about it, they said, oh, somebody probably just spilled something.
Yeah.
Right? So on the third floor, same stain. On the fourth floor, same stain. On the fifth floor, same stain. And on the what do you call it? The roof.
Yeah.
Everything, not the roof, the ceiling. Everything is like all worn.
Right.
But the ceiling of that property was like
brand new. Yeah.
Right? And I'm just like, yo, bro.
Yeah.
Common sense, there's something going on.
Yeah,
Right.
it's just
Clearly
like
water damage.
it's just like the room says 1986, but the ceiling says 2025.
Yeah.
And there's the same stain that goes all the way down.
Right.
So that leads me to believe that there was something going on with the roof,
Right.
and it bled all the way. It bled all the way down. So it's probably safe to assume that the beams have been damaged all the way down. So it's just like by you just telling me some bullshit right now.
Yeah.
It's just like your credibility is shot with me. So now I'm just like looking. Now I'm just looking for stuff.
Right.
So I think what we do real quick is we go to a break, and when we come back, I want to talk about the future because we're in 2026. And those bad actors, they got a lot more technology that's going to help them potentially do more harm potentially. But someone like you who's savvy has a lot of ideas and ways that you can navigate that. And I want to definitely hear about that when we come back from the break. But for you at home, we're going to have a quick word from our sponsor, Debbas. Don't you go anywhere. And when we come back, we're going to hear a little bit more from Jude Bernard.
From residential and commercial closings to litigation, Debbas is your full-service real estate law firm. We blend big firm knowledge with boutique-level attention, delivering outcomes that exceed every expectation. Contact us at romerdebbas.com.
Hi, I'm Evan Greenberg with Langdon Title. I specialize in title insurance across New York, helping real estate attorneys, agents, and brokers close with confidence. I solve problems fast and keep your deals moving. Contact me anytime.
All right, welcome back to the Boro4Boro podcast. If you're just joining us, we've been here having a great conversation with Jude Bernard to learn a little bit more about how do you navigate finding a deal in New York City real estate. And Jude, who's been doing it for over 20 years now, is obviously an expert. But now we're in 2026 and everyone thinks they're an expert, or at least could be an expert because of technology. So Jude, my question to you is, do you lean a lot more on technology these days? Obviously, you're big on Instagram, which is how I know I was first introduced to you. But do you find yourself leaning on a lot of the same tools that you've used over the 20 plus years, or are there a lot more technology that's at play in how you go about your day to day?
Well, I'm real old school, right? Like, truth be told, I've been in this game since 1997. I still don't have a website. I still don't have a business phone number. I still don't have an office.
Right.
You know, like my phone is my technology, right? And in regards to, yes, I think the basis for me has always been relationships, and one of the things that technology affords me is that I get to communicate to more people, whether it's Instagram, whether it's whatever social media apps, or just talking to people in general. I don't have to meet people face to face. You know, I can develop relationships with them, but at the end of the day, deals happen through relationships. You know, who are you? You know, who are you going to call first? You guys are all brokers, right? Like when you guys have a hot deal, you know that there's one or two people that you always call first and give them the first right of refusal.
Right.
So how do you become somebody's first right? You know, the person that they go to, right? And there are some people that I know that I'm not their first person, or their second or their third. So when they call me, it's just like I'm really looking at that deal and scrutinize it, and the first thing that comes to my mind is like, well, why didn't their first person or their second person to jump on this? Right. So it's chess, as I said before.
Yeah, it's pretty common. I'll have a property and I'll get in the first 24 hours at least 15 investors saying, I'll give you this for this property. You know, I think it's like a return kind of thing. It's just like every time you post something, people contact you. But I'm curious to know a little bit about, like, once you acquire the property, what is the process throughout? Like, are you doing gut renovations for a lot of these properties? Are you just doing minimal work to just get the property up to par?
It all depends, right? It all depends. Like, first thing this is going to sound real weird, right? This is going to sound real weird. First thing I do is I just, like, sit in the property for a little bit and just kind of absorb the energy of the property.
Yeah.
Right? And see what has to go, what has to stay, and then another thing that I'll do is I'll sit outside, especially in some of the neighbors that I have, is standing outside and see what's happening in the neighborhoods, right? Especially like places like Harlem or Bed-Stuy, right? And this is All right.
So far, not so weird so far.
It sounds a little gives like a you know that show? Watch people.
So
it's about the energy. I get it.
Yeah, we see the energy. And back in the day, I used to do this thing called WPM ratio, right? Right.
Just wait.
Especially in like really like up and coming neighborhoods, like like real far out in Bed-Stuy and stuff like that. What I wanted to do was see white people per minute, right? And this sounds kind of crazy, but it shows like how quickly the neighborhood is gentrifying, especially areas that were mostly minority neighborhoods, and then you could kind of see how new neighbors are coming in and embracing the neighborhood and stuff like that.
Right.
So like how ready is the neighborhood to embrace new faces.
Absolutely.
Right. So that's one of the strategies that I used to use. So I used to sit there and watch and help me develop what strategy. Like if there were a lot of new faces in the neighborhood, then maybe I need to develop this in a manner where it is inviting to where the neighborhood is going.
Now, are you speaking in terms of renovations?
Yeah.
Okay.
In renovations, in what you could do with the property, and also another thing that I do is I really try to assess what is the best use of the property. Because just because you acquired it as a one family or a four family doesn't mean that that's its best use, especially in places like Clinton Hill.
Yeah.
You might buy a 3-family in Clinton Hill, but the price per square feet on a resale of a single family is significantly higher than that of a 3-family. But there are certain neighborhoods like like East New York. East New York, the price per square foot is higher for per unit count than a single family. So it's just really knowing the culture. The culture of the particular neighborhood, and working towards it, working with it. Excuse me.
Right.
So you want to always go with the stream, right? You never want to go
against it.
You never want to be a salmon.
Right.
But a lot.
It sounds like you have a different strategy for each neighborhood, which is very, very good. So knowing
like,
what you're gonna get.
There's no
into.
cookie cutter.
Yeah, that's what I was going to say.
Like there's no cookie cutter. Like in real estate, there's no right or wrong answer for everything. It's what's best for you.
Right. So that's what I was going to say. It doesn't seem like there's a like you do cookie cutter for all your properties.
No.
So then how does that look like when it comes to the financing of the property? Are you spending the same amount per square foot on each property, or does it depend?
No,
And how much is it roughly now to do a gut renovation? $1 per square foot.
It all depends on what the end goal is, right? So if the goal is right now, all right, let me give you a true example. There's a property on St. Nick and 145th that I just acquired, right? And this particular property, where it is, it's not ready just yet for me to go all out.
Right.
It's not ready.
I know exactly where you're talking about.
Yeah.
Because of the neighborhood is not ready.
Yeah.
Okay.
It's not.
I know.
But it's getting there, right? So what I'm doing right now is I'm basically just putting a little lipstick on it,
Right.
trying to just get it rented, and I'll revisit it in 3, 4, maybe even 5 years, where I will get a better price.
Okay.
I've done the same thing on Quincy Street, Quincy between Troop and Marcus Garvey. I acquired that property in 2007.
Yeah.
And I everything was rental grade there for that entire time.
Yeah.
Last year I did a renovation. I spent about $400,000, $500,000 in renovations.
Oh, wow.
And I'm putting it on the market for upwards of $2.5 million.
Wow.
So it's just like
If
sometimes.
you're looking for a broker, There's one
Yeah,
head.
this is what we try to express to our clients. Like sometimes it's not about what's going on there now, right? People
Right.
want to live in the trendy neighborhoods, what's going on, but you got to find those properties that are just kind of like in the developing stages, hold it, renovate it, rent it out, and then reassess it a couple of years later, and then that's when you really make your money.
I always tell people, don't wait to buy real estate. Buy real estate and wait.
100%.
Like get in, get whatever you're gonna get, but have a long-term strategy.
Right.
Like I've yet to meet somebody that says, "Damn, I really regret buying that property 5 years ago."
Yeah.
Especially in New York. I mean,
Right.
Yeah.
look, there's always different headlines about whether New York's back or whether it's going away. But the reality is the numbers show New York is always going to be a good bet.
Yeah.
But social media will have a lot of people out there, and unfortunately a lot of younger folks who want to get in the game. They're excited about, the finished product because media is making it a lot easier to be able to show the beginning and end. But for somebody who's at home, who may be younger, older, whatever, but is interested in doing what you do, what's the one piece of advice that you have for them other than look at it at a longer term play?
I would tell them to build their team, right? You need a solid team. Real estate is like a marathon, right? All these marathoners, you see them out there by themselves. A marathon day, they're running out there by themselves, but in reality, there's a nutritionist, there's a trainer, there's a coach, there's there's all these people, and this is the same thing. This is the same thing with us as real estate people. You see me here, but there's contractors, there's attorneys, there's architects, there's expediters, there's get your team together, and even with that, make your team is always going to feed the same way you're feeding your team is always going to feed you.
Right.
Like we spoke about today, making sure that the team was straight.
Right.
That's how you have to move, because at the end of the day, if everybody's strong, everybody eats consistently.
Right. Makes sense. And then I guess lastly, what is your call to action? What are you looking for? If somebody wants to reach out to you, what type of properties are you looking for? Is there anything you're working on in the future? Any big projects you want to let the people know?
Well,
and how do they find you as well?
I'm on the gram, Mr. Jude Bernard, on social media. Jude Bernard, easy to find.
Right.
And at the end of the day, I like to buy property and feel like I committed a felony. Like I don't want to,
Talking like you're really from Flatbush.
At the end of the day, every time I leave a clothing, I like to walk around, make sure nobody's following me.
How did he get that property?
You see something nobody else sees.
Exactly. And I always say that there's only two ways to make money in this business. One, by doing something that other people won't do, or two, seeing something that other people can't see. When everybody was running away from those SROs and Class B properties, I was running towards them because I saw an opportunity there. When everybody bypassed of what became the Brooklyn Bank, there's just there's nothing you could do with that. There's no up, you know what I'm saying?
Yeah.
I saw an opportunity to do something different.
Right.
You know what I'm saying? So that's why I say we always have to go into the property and soak it up and not just listen to what people are telling you to do with the property, because what they call it, highest and best use. Like you always have to do your own personal highest and best use case study in your head. You know what I'm saying? Like, what's the best thing I could do with this property? Not what, let me not just regurgitate and do what it is now. Maybe it needs to be reconfigured. Maybe the business model on this is to get Section 8. Maybe I have to. Maybe it's free market. Maybe I need to work with a nonprofit and get some sort of government grant situation going on. You know what I'm saying? Think outside the box.
No, I mean, I think there's no better mic drop moment than that kind of quote. So thank you for that, Jude. And again, thank you for your time. I think this is like the perfect conversation that we could have had to start the year.
Definitely.
I know I learned a lot. And it's clear that everything that you said gives us reason to be optimistic about the market, and always look at deal making as a reason for optimism. So thank you again for joining us.
Thank you very much for joining us.
And this has been another episode of the Boro4Boro podcast. Thank you for joining. And if you want to be able to listen to this episode and other episodes that we have, make sure that you like, follow, and subscribe to this. And we'll see you on the next one. Thank you.